And our market monitor tonight has some unloved stocks she thinks investors should own in their portfolio. She's Diane Jaffee, Senior Portfolio Manager at TCW, an asset management firm with $180 billion under management. Diane, welcome. Good to have you with us.
Thank you, Tyler. Good to be here.
Let's start by just sort of a rundown of your overall view of the market at today's levels of 2 weeks in a row of gains. We hadn't seen that in quite a while. And back above 18,000, close to 5,000, 2,100 on the S&P.
I was glad that the market paused during the first quarter to let the commodity prices sink in and let companies figure out how they were going to react. And now I think that we're going to be very interested to see what first quarter earnings bring, and I think the market is stronger from here.
What do you think first quarter earnings are going to bring? And will the rising dollar be the excuse du jour?
I think that the dollar will definitely have an impact, but when we talk to our companies with overseas sales, they would much rather have a stronger Europe, a stronger Japan to sell their products to.
All right, let's move on to some of your picks. You liked GE before, let the record show. You own it before today's news. Do you love it even more now?
I do. You know, I would heartily, it's one of our largest positions. We still believe there's at least 20% upside. It's selling at 2.2 times price to book. And it's now reaching the point where, in terms of dollar price, that it hasn't seen since the crisis.
You must feel very good today because it's been a long wait for GE.
I feel good for our clients.
All right, yeah, all right, good enough. Let's move on to your next one, which is another long-time unloved stock, and that's Citi.
Yes, and that isn't having much love this year, but we think it too is continuing its restructuring plans in terms of asset sales in Central America and Eastern Europe, and it's trading below book value. And so while, you know, it passed the CCAR, the stress test earlier this year, we think it's got a lot of room to run over the next 1 to 2 years.
And your third one is Chesapeake Energy, a stock which either has a history or a past.
We're gingerly pacing our investments in Chesapeake right now. It's trading below price to book. Generally, E&P companies trade best on price to cash flow. It's trading at 2.5 times price to cash flow. And what I feel good about is that it has over $8 billion of money in the bank, so it can wait out a long-term low commodity environment.
Is your investment in Chesapeake an expression of bullishness about the sector broadly or about the particulars of this company?
We have been underweight energy for most of 14 and continue to be underweight energy in 15, but we want to take opportunities that the market's presenting, like Chesapeake.
All right, Diane, thank you very much. Great picks, and thanks for moving quickly through them. We appreciate it.
Thank you, Tyler.
Diane Jaffee with TCW.